All right, what is going on, Discord family, and welcome back to another edition of Market Review. If you're watching this on YouTube, welcome to the shop. My name is T. Hobbs. This is the market review for May 13th, 2025, year of our Lord. I will be breaking down the NASDAQ, the S&P 500, the Dow Jones Volatility Index. We'll take a look at some of the news on the day. We'll talk about some of the things I did today because it was a lot of bullshit. But at the same time, every day, in my opinion, is a lesson learned. And today, again, the market continues to teach me lessons. I've been at this thing for about 3 years, right? So I'm not surprised when I get taught another lesson. Today was just about me not following rules, and I'll get into all of that once I break down my pre-market plan. So I'm going to jump over here to the NASDAQ because that was my weapon of choice for the day. And I'm going to go and review my plan, which I didn't follow, right? But my pre-market plan was simple, okay? We were in the markup phase. I took a look at the daily candle. I saw that the daily candle was expanding, right? It's one of the things that is one of my Achilles heel. If you ever see the market in expansion mode and Hobbs is trading New York, oh boy, watch out, because it's probably going to be some L's that's going to be taken that day, because I'm the type of trader that even though I can write the plan, I just don't feel comfortable getting long at what I call, quote unquote, the high, right? I'm going to explain what I mean by that and why the high ain't really the high until the market says it's the high, okay? But anyway, we were in the markup phase. We were bullish as long as we stayed above 20,540, which you can see we clearly did that. We were bearish as long as we could stay below 20,996, and you can see we did not do that. So all these flags are telling me, hey, above this level, we're going bullish, but we're gonna get to that. Buyers were able to hold the PM session from yesterday, making a higher low. Therefore, and this is the crazy part, you're gonna crack up when you hear this sentence. Therefore, I am anticipating more upside as we attempt to take out the previous day high. I will look to target daily supply above, which is 21,455. All right, which is exactly what the market did. But of course, I didn't listen to any of this. Like, why would I follow my plan? That'd be like, right, okay. So high of the day, right? High of the PM session, 20,996 through 20,950.75. Low was 20,814 through 20,756. And then I was looking for longs if we could come back down here at this 4-hour fair value gap. What I should have been doing is I should have been looking for the second part of this plan, which is break and retest above the high or the low inside of the chessboard, which is exactly what we did. And then my extreme bearish plan never triggered because, we never came up here. So really, I shouldn't have been looking for shorts until we got inside of this red box. So just by my tone, you could probably ascertain that I definitely shorted the market before that. So let's drop down to the 15-minute. I'll talk about some of the trades I took and the reasons for me taking them, which probably had nothing to do with my pre-market plan. All right, let's be real. All right, so bright and early this morning, I waited on the CPI candle, and this one kind of threw me off a little bit. This is the first thing that threw me off, right? The CPI candle came in at 8:30, right? When I saw the CPI candle, it came in as a range, which was weird, right, for CPI. I'm usually used to like a big move up or a big move down. So instantly I started getting really bearish, right? So I was like, all right, inside of this CPI candle, I don't want to do anything, right? Above it, I want to go long because I'm anticipating the market to go higher. Below it, right, I want to go short. I'm anticipating the market to go lower, okay? In the middle, I don't want to do anything. First trade of the day, right in the middle of the candle. literally right in the middle of the candle. What did I do? I went short. Okay, wrong decision. Stopped out. All right, we get all the way up to the high. I ended up going short again, and at least let me put on a 5 minutes so you guys don't think like, man, this was ass trading. Like, it kind of was bad. It was really bad. All right, so I ended up going long, or I ended up going short again. I think on this doji candle here, retested this doji candle. I ended up getting short somewhere in here like 21,069 or something. Got absolutely obliterated. Then I took one more. I took another short up here, got stopped out. And I think I took my last one up inside of this consolidation. Again, notice how none of these areas have anything to do with my pre-market plan. Nothing, right? And what I'm going to tell you about this day is as irritated as I was that I kept taking losses, because I have a system I couldn't really be mad, right? Because my system, my pre-market plan is my edge, right? And if I'm not following that system and I'm not taking advantage of my edge, then I'm trading with a dull ass knife, right? And the market will ginsu your ass if you show up with a dull knife, period. And that's what happened to me. The market turned me into chop suey, right? Before 11 o'clock, I was smoked, right? I was logging out of my account and being done. But here's the thing. If you have a system and you don't follow it, should you really be upset when you fail? Not really, because you failed to follow the system. That's human error. Doesn't mean I need to go back to the drawing board, change my entire system, right? Like do something completely different. That's not what that means at all. And I'm not going to. There's no back testing I need to do. There's no magic pill I need to go take. You know, I don't need to worry about it, right? Like losses happen, and the majority of my losses happen. They come from me being a human being, right? A person that even though we know the rules, right? We have the rules in place. We know we should follow them, but because we're human, we say, well, what if it does this instead? And that what if is just enough for the NASDAQ to cook your ass. And today I got cooked, right? Did I lose and blow my account? No. Did I overtrade to the point where I got destroyed? Absolutely not, right? But what I did do was I went to another account, and all those things that I just said, I did all of those things over there. And that account did blow. So although I was mature on my funded account, right? I went and let out some of that immaturity, and I just continued to short this thing somewhere else, right? Which is bad. It's not a good habit, but let's be for real. If you've never done that on a funded account, on a prop firm account, then kudos to you, but I'm not you, right? Sometimes I got to go blow off a little steam and just remind myself that no matter how stubborn you are, the market can remain irrational much longer than you can remain solvent. So today was about lessons, right? I learned a lot of lessons. The biggest thing, when the market is expanding, right? When the market is expanding, my pre-market plan to break and retest this level, I usually fade it, right? I usually say, well, yeah, that's what I'm supposed to do, but I don't really like break and retest, so I don't trade it, right? But the reason why I fade it is because I don't really understand the filters for it. Today taught me a valuable lesson because I was able to decipher a filter, and that filter is aggressive up or down trends, or basically when we're in expansion mode, right? When I can see the true expansion coming out of here, strong expansion, that means that these highs, right, are not really highs. They're soon to be higher lows, okay? So when I see that, I need to just jump right into that. And again, following the plan is very important. This probably won't be the last time I won't follow my plan, but I'm the type of person, like you see me, I don't brag, but I definitely post my progress, right, on YouTube, on Twitter, right? I definitely do that in other Discords, but I'm also the person that's gonna come in here and tell you what it is when I lose, right? If you got friends, accountability buddies, partners, YouTube creators, and Twitter hustlers that never lose, it's not that they don't ever lose, is it that they never tell you when they lose, right? I don't mind telling people that I lose or that I blow accounts or I do all this other stuff, because to me, that should be way more valuable to you than me winning every day. You learn nothing when I win. You should learn a ton when I lose, right? Maturity, immaturity, lack thereof, right? Balance, whatever it is. Like, how do you deal with it? Like I told you, I went and cooked an account, a Combine account somewhere else. Like it was an Apex account. Shit cost $30, okay? But I needed to go take that frustration out somewhere, okay? So I did that, right? And, you know, that account didn't make it, right? But at the same time, am I gonna hide that from you? No, like I don't care, because I know ultimately my system works. Now, this is supposed to be a market review, so I mean, we can review the market, but let's be real. The only thing the market did with today was go straight up, right? The big thing is right here between 21,070 and 21,100. There's a fair value gap on the 5-minute. Market's coming back to that. It's probably going to go fill that, and we'll see what the market brings going into tomorrow. Right now, what I got going is a double top at the data high, which was really, really important to me because I'm still bearish. Nothing has changed on my bearish thesis whatsoever. the market gapped up from Monday. It rallied up into Tuesday. And if you go back and watch my top-down analysis, which will be in the end screen of this video, if you haven't watched it yet, today is a good day to watch it, because if you watch my video, I talked about the market becoming very bullish Monday and Tuesday and getting up to these bullish weekly highs, which is exactly where we went to. And then ironically, we stopped right here, right? These are levels that I put on the market, put on this chart on Sunday, right? I'm gonna show you on the S&P where we're at as well, right? This is why I'm extremely bearish the rest of the week. I do not trust these bulls because the market has been way too bearish for way too long. And as much buying as the bulls have done, they haven't accomplished anything in the higher time frame for me, right? That's just how I'm looking at the market, right? Moving over to the S&P 500, again, I didn't write a plan for it, but I think it's important to look at it, right, to develop kind of where we are moving forward for the rest of the week. That's what I'm going to use this time to do, right? If we look, we talked about this level as well. Again, top-down analysis will be tagged at the end of this video, but 5.49%, that was our weekly projection. That's one of them. The second one is 5.41% up from the weekly fib. We gapped up, right? And then we rallied right above it. And this area is the sell zone, because again, if you go watch the top-down analysis, I talked about November 4th's low acting as a resistance. Guess what this level is? It's November 4th's low, right? And then last but not least, we take a look at the Dow Jones. And again, one thing that I talk about all the time is it's very hard to manipulate the Dow because it doesn't have a lot of stocks in it. And when I say manipulation, what I'm talking about, the true word should be just, what's the word? Kind of like maneuvering or positioning, right? The market's not manipulating, right? So to speak, that's just the word we give it. But the market is repositioning inventory, right? Meaning if the Mag 7, if people start to move out of the Mag 7, it's going to create volatility in the indices, but it can still stay balanced because they're not taking the money out of the indice. They're just putting it in a different part of the indice that has more weight to it, right? Hence the word manipulation, right? But the Dow Jones only has 30 stocks in it, right? It has other things in it, but stocks, it has 30s. So it's harder to manipulate this thing when things go wrong inside of it, right? Which is, and I'll give you a brief overview of what I'm talking about. So you'd be like, what do you mean when things go wrong inside of it? Here, let me show you exactly what happened today in the Dow Jones this morning that was completely different than any of the other instruments. All right, let me pull up this real quick. All right, right here. I'm gonna share this tab. Look down here, United Healthcare, right? Down 17.7% on the day. And if you pull up the chart, right, you go and you pull up the chart and you can actually go expand this chart and you can go to the side and you can say, okay, what happened? Well, there's a couple things that happened. A class action lawsuit was filed against United Healthcare Group alleging violations of federal security laws for improperly denying health coverage to boost profits. That's one thing, right? But there was another little thing that happened. I don't know if they got it in here. Let me see. Let me go there. Ethical, UNA's legal news. Oh, yeah, here we go. United Healthcare Incorporated stock plummets 22%, triggering a class action suit. Now, the reason why I dumped wasn't just because of the suit. There was another thing in here earlier. I don't know if they still got it. Let me see if I can find it. That was 5 hours ago. Steps down, profit outlook. Expected medical cost, CEO steps down. Dang, the CEOs. Yo, there was so much news coming out of this stock today. I'm trying to find it, but basically what happened, right? And I can't find it right at the moment, but what happened was they illegally, right? And this is the shit you can't really like plan for, but they illegally reported their earnings incorrectly by about $2 billion, right? And then when they re-reported, the EPS was down about 2 billion. So basically when people bought into the stock, they were buying in after earnings, right? Anticipating the stock to be worth a lot more because it had dumped because of the murder of the CEO. And then when they got the earnings, they're like, okay, we'll buy it up. But they lied. Hence the class action suit. Hence down 17% on the day. And it's probably going to continue to fall. So the Dow Jones could not get any push to the upside because, again, it only has 30 stocks. So if one of them goes red aggressively, the Dow Jones is going to continue to fall. So one thing I always say is that the Dow Jones is the oldest of the three, and it's usually the one that's front running all of the information, right? So a lot of times you'll see the Dow start to fall prior to the NASDAQ and the S&P 500. Now you can take this with a grain of salt, or you could go back test it. You could go look at the top of the market last year. Go look what happened to the Dow first before the stock market, the S&P and the NASDAQ fell. And it was the same stock. 3 times the Dow has fell this year. And it was because of the same United Healthcare scare. And this is the 3rd time we've gotten another bad news report from United Healthcare that's dragging the Dow down first. And eventually, if history repeats itself, it's going to start to drag down the S&P 500 and the NASDAQ. The other thing that I'll bring to your attention is the volatility index, right? The one thing I said, again, at the end of this video, you'll get a link to the top-down analysis. Watch it, don't watch it. It's not going to matter to me. But one thing that I will say is that one thing I talked about was I said by the time the market hits its daily supply zone, which is what we hit today, I expect the VIX to be at its daily fair value gap, which is where we are today. On a Wednesday is what I said in the video. So I anticipate these things happening by Wednesday because I want to see Tuesday bring the high of the week. So far, we've gotten everything that I'm looking for to be a bear the rest of the week. So let's see what the market does. Again, I'll be continuing watching the VIX tonight. Well, I won't watch the VIX tonight, but what I will watch is this other little guy, and his name is GC, right? Gold did something interesting on Sunday. It gapped down, right, inside of a discount, right? On Monday, it put what I would assume would be the low of the week, because since Monday, we've only been making higher lows and higher highs, higher lows, and now we're here, right? We're above the end wall, back above the end wall from May 4th, which is exactly where I said we would be for gold, right? I talked about us coming down to this end wall, sweeping it, and getting back on top of it to potentially go back up. If I see gold rally tonight in an aggressive manner, it's only going to make me more and more bearish, because think about how the hedge funds are thinking. All day they bought the market, right? All day. People probably bought calls. They probably swung calls, and they were probably buying them right at the top. What time did they decide to dump the market today? Think about that. They dumped the market with 10 minutes left in the session. Who's trapped? Who's in pain? Right? If they continue this behavior inside of Tokyo, they gap it down a few 20, 30 points, and they continue to do this, who's going to be in pain? Right? It's going to be those buyers that are at the top of the trend. So just food for thought. Again, continue to read the market day by day. I'm not trying to predict the market. I'm just trying to be prepared for how I view the market moving forward. It helps me. I hope it helps you, but that's all I have. My name is T. Hobbs. This is the Trader Shop, and I hope you guys have a great day. Peace.